All right, so a very good evening to all mentorship traders. 26th of Feb 2020. We are back to our Wednesday evening sessions, 8:30 p.m. We did a market review over last Sunday because we had missed last Wednesday's session. So extending from the last Sunday's market review that we did, where are we today? Well, this is the weekly chart of Nifty. The index has definitely slipped inside this yellow channel. I'm going to take it off for the time being because two important things that we should look at it now is first this support zone earlier, which we had marked. The market is back to that zone. But what is more important for me is the fact that very close is this lower border of this long-term channel. Now, the fact that this long-term channel has lived up to its self so well, let me show you. This channel goes back as far as December 16. So we are looking at a 3-year-old channel. And the last time the channel came under threat was during this time of August 2019. This was the phase, the August-September. And a few hundred more points for the Nifty, and we are looking at a threat of this channel. Why this concerns me a little bit is if you have a confirmed breakdown of a 3-year-old channel, that's not good news. So the market is essentially approaching very crucial levels, whether it will hold or not, whether it will bounce back or break down is to be seen, but it is approaching important levels from a long-term perspective. You will remember this red channel which we drew in our last Sunday session. And the index has now come close to this lower border of the channel, and this erstwhile resistances which acted as, let me draw and bring your attention to this point. So the erstwhile resistances that we had here, wait a minute, let me try and get the pen in place. Yeah, I don't know why is it going away. Let me try again. All right, some issue. What about the highlighter? The highlighter seems to be working. All right, so the resistances around 11,600, 700, which we had a couple of times, did act as a support once few days back, and now we are in this zone. This is a very important zone. We're looking at 11,600, 700 for the Nifty spot as an important zone. Why I say so is because one, it is at the lower border of the channel. Two, it's at erstwhile resistances and support. So I think this fall that we have for the consecutive 4 days and this zigzag fall that we had, one ABC kind of fall, will find some support here. So from a trading perspective, it's not the right time to go aggressively short. It's time for quick short-term contrarian longs, or else wait for a bounce back to go short. Do not look to go short over the next 2 days. The markets are hitting strong supports. 75-minute chart, one time frame lower will of course reflect the same zone that I had shown some time back. Divergences are shaping up, so the markets are at supports. Divergence on the short-term time frames will give you opportunity of a contrarian long trade. Just remember one thing, the bounce back may be short-lived. So whatever long trade you do not attach too much expectation to them. That is secondary. The primary is do not go aggressively short over the next 2 days because the overall benchmark index is at strong supports. But the trend, if I take you back to the daily chart, is definitely down. And it's time that we see that once the market finds support, how far will it bounce back? The last time it bounced back was really sharp, which was post the elections. Now it is important to see what will be the strength of the bounce back when it comes. Bank Nifty. Similar situation for the Bank Nifty, but it's fairly away from the lower border of this falling channel. Of course, we have a Fibonacci retracement confluence with this channel border, but the index is a little far off from there. We're looking at 29,500, but the index is at above 30,300. But similar price structure, it's in downtrend when you look at the daily chart. When you consider the weekly chart, relatively better off than the Nifty. This is mainly because during this phase, the Bank Nifty and the banks outperformed the Nifty. That's why there is certain degree of outperformance still left in Bank Nifty. But the weekly charts are similar. I'm sorry, the 75-minute charts show you this falling trend line, which the index is respecting so well for such a long time. We don't have such immediate divergences on the Bank Nifty right now like we saw in the Nifty. So the Bank Nifty not extremely bullish per se right now, though there are stocks like SBI which is holding well. There is an intermediate divergence. If you have paid attention, you would find that there is a definite intermediate divergence here on the Bank Nifty 75-minute chart. And this can lead to some amount of bounce back, not extremely bullish, but I'd say that it's the Nifty which is poised for a better bounce back compared to Bank Nifty. It is Nifty which is at crucial supports, both from a perspective of earlier levels and falling channel. And it's Nifty which is shaping up with divergences in the immediate time frames. So overall, I think that it's the Nifty which has a better chance of a better bounce back compared to the Bank Nifty. The banks may not perform in the bounce back as much as others do. So let's quickly check whom are we talking about. So if we take let's say a report designer here, and I quickly check the rate of change of stocks, rate of change in terms of percentage, and I'll take, let's say, the last 3 days on the daily time frame. And if I take you to the Nifty 50 stocks, then we will find out which are the stocks which got really beaten down. Hindalco down 10%, GAIL, Tata Motors, Eicher Motors, Vedanta, JSW Steel, Sun Pharma. So I can see metals in terms of Vedanta, Hindalco, and JSW. I can see Maruti and Tata Motors and Eicher Motors, automobile, and odd Sun Pharma. We have Maruti and GAIL also there. I'm sorry, ONGC and GAIL also there. Reliance is down over 6%, close to 6.5%. So if we expect the Nifty to bounce back, we would look for participation coming in from stocks within this list. It's tough to take a call right now because the way things have fallen down. Titan is at a good juncture for a bounce back, though it's not a index heavyweight, but I'll definitely keep a watch on a couple of stocks. One of them is Reliance, Tata Steel. I'll definitely keep an eye on State Bank of India. I told you some time back this stock is holding well. This is on the verge of a breakout above 330 levels. Yes Bank does not play any role. So Reliance, State Bank of India, and definitely ICICI Bank. Let me figure it out for you. There you go. ICICI Bank is the other stock I'll keep a close watch on. Sunday, we took a call that we are cautiously bearish. The bearish part is playing out of well, and the index has sold off back to its previous lows. Going forward, for the next 2 days, we don't want to be bearish. We would like to cut down our short positions. With the expiry coming up tomorrow, we would like to roll on our positions if you're holding on to them. Stay quiet for the next 2 days will be a better option. And next week, look for swing shorts or contra longs. Go for strong immediate divergences like we get in our hook trading setup. All right. Well, that's what we discussed for the view over the index. As always, now let's talk about your trades, your doubts and questions. All right, let's begin.